Hi guys, welcome to TCM Education, and this is our second video of our series, Why Trade the US Equity Markets? What's the deal with day trading, investing, short-term trading? And basically we're going to run through these topics. At the end of the last video, which was the first video out of 4, we discussed Tesla. We looked at the chart of Tesla, which is the chart here that you see in front of you, and I will explain what each bar here represents. And it basically represents the last trading year, basically the last 7 months of the price action in Tesla. So again, let's move now into the chart and see what a red bar means and what a green bar means. So if we look at a red bar, it's called the Japanese candlestick bar. Why is a Japanese candlestick bar? Because a Japanese guy invented this form of representing charts many years ago. You want to know everything about candlestick bars, you go to either Investopedia or ChatGPT and you'll be fine. So each bar represents 4 price data: the high of the day, the low of the day, the open, meaning when the bar opened. In this case, because it's each bar represents 1 day, it's obviously 9:30, and the close, most of the time it is 4 p.m. and those are the 4 data points on each bar. On top of that, each bar represents, of course, the date of that particular bar and the volume that was traded during that particular day. So we have basically 6 inputs of data into each bar. Now, a bar can represent 1 trading day, and can represent 1 year of trading, and can represent 1 minute of trading, according to the chart and your personal preference. So if we want to know what happened with Tesla over the last 6 to 8 months, we look at the daily chart. If we want to know what happened to Tesla over the last 5 years, we have to go to the 5-year chart, and this is what happened in Tesla over the last 5 years. Keep in mind that the chart looks a bit crazy because Tesla went through a couple of stock splits. We don't have the time to discuss them, but trust me, investors made a lot of money in Tesla despite what you see here on this chart. If we go to the let's see 1-year chart, this is how Tesla basically looked. A year ago in August, the price was 182. It climbed to 480, went down to 210, and now it's in the middle somewhere at 315, according to yesterday. So again, coming back to the YTD chart, which means year to date, each bar represents here 1 trading day. We have the highs of the bar, the lows of the bar, basically all the data that we need. And basically this arrow points to the data here that I'm showing to you: open, high, low, close, the intraday change, and so forth. So basically, if you look at the chart, you're going to get all the data that's relevant to that particular time frame. Okay? Now, if you are an investor, you look at the chart and you make your decision: is it 315 or 316 price for Tesla cheap for you? You want to buy 1 share or 1,000 shares of Tesla, or you want to buy it when the price goes down to 250, or you're going to wait until the price develops and you want to buy when everybody else is going to buy and the price goes over 360. So there are various types of ways of investing and trading. We're not going to dwell into that right now. The idea here is to understand what this basically formation that you're seeing in front of you represents, and how you can look at it if you are a long-term investor or a short-term investor. So again, many people see it in different ways, and that's fine. That's why the price of Tesla fluctuates so much, because some people think the price will go down, other things that the price will go up, others have positions that they're not selling, others have positions that they are selling. And overall, each trading day in Tesla, just to make a point, on that particular trading day when Tesla went down a lot, it traded nearly 300 million shares. 300 million shares, and the turnover in terms of money was 87 billion. You can see those numbers here on the chart. And trust me when I tell you that 87 billion in Tesla on that particular day was more money that was basically turned over in the whole UK market combined in that particular day. So the whole UK market versus one stock in the US equity markets, and Tesla traded more money than the whole UK equity market combined. Again, not to brag about how big and important the US equity market is, and they attract investors from all over the world. Obviously, you don't have to be an American to invest in Tesla. You can be a Chinese person, you can be obviously a British person, you can be an Israeli, you can be an Arab, you can be whatever you want to be. US equity markets are open freely to everybody, as much as I know. Okay, now let's move into what we are really interested okay, those are investors. They're looking at the daily chart. They make the decision based on the daily chart and other way of inputs, like reading about Tesla, reading analysts, reading Barron's, the Wall Street Journal, basically getting on board with all the data that they can provide and making their decisions. They have maybe an investment advisor that is mandatory in some cases and in some jurisdictions. None of our business at this point. So what about us as day traders? How can we make money in stocks trading the US equity markets? Of course, if we look at the daily bars, it's not going to be very helpful. So let's look at the intraday bars. Okay, so let's take a look, for example, at NVIDIA. This is the intraday bar of NVIDIA. Let's go back a couple of days, and I will show you how equity markets in NVIDIA, or basically NVIDIA, is being traded. So let's see here an example. This is NVIDIA on July 1st. You can see that the stock, hold on a second before I continue with NVIDIA. Here, each bar represents only 3 minutes. Remember, on the daily chart, each bar, Japanese candlestick bar, and you must Google, ChatGPT, go to Investopedia. You need to learn the definition and how each bar represents the price action and be on top of that. So, but we're not going to dwell into that in this class, in these videos. We don't have the time. So again, each bar represents 3 minutes. This is what happened. So the stock comes down, touches the lows of the day. In this case, it's 156. Then bounces up, comes down, and then you can see here it breaks 156 and drops down a lot. What is a lot? In this case, down from 156 to 151.50. That's $4.50. So if you shorted or basically sold, and it's possible, I hope that you already know by now that it's possible to make money when you sell expensive and buy cheap, instead of buying cheap and selling selling expensive. It's the opposite process. So first you sell and then you buy, and in this case you buy at 156. Let's say you sold here 100 shares. You made per each share $4.50. That's $450 of profits. And as a day trader, you need to repeat it a couple of times per day, maybe 10 times per day. And if you manage to repeat it 10 times per day, you are a very happy day trader. Obviously, it's not as easy, and you need to work and apply yourself and learn tactics, how to do it, and learn technical patterns and timing and everything that's going on. But this is not the purpose of this video. The purpose of this video is to show first that you can see what's happening in the intraday session. So because it's in front of you, the chart is in front of you, you can make the decision if to buy. I mean, let's say that you want to buy here at 156. You think the price is cheap. Okay, you can do it. You need to protect yourself with a stop loss. But let's say you don't protect yourself with a stop loss. Then you're going to lose money. How much? Depends on your initial position. But basically, the decision is in front of you as a day trader. You can make the option to buy NVIDIA at the lows of the day because it's cheap. In this case, you're making a mistake and the stock drops, and a day later or 2 days later, it can recover or go down another 5%. Again, this is not the topic. The topic is that you, as a day trader, can observe the price action. You know how much time each bar represents. You see the volume, you see the price, and you can make a decision to go short or go long, okay, according to your account. Again, each share is $156. Let's say you have, I don't know, $20,000 in your account. You can afford to short here 100 shares, which is $15,000 out of the 20,000. Let's say you don't use leverage, which you can, and then in this case you can make money while the stock is moving down. And this is basically the job of a day trader, to make money, observe patterns intraday that support the idea that the price of the stock is moving down. Of course, there will be patterns, and I will show you in a minute, that support a different type of movement in a stock. And let's see an example. Let's go to a list that we on our channel use frequently. And here you can see a symbol of a stock, not an important one, Solar Edge, that's the name of the company, SEDG. Let me show you what do we know about this company. The name of the company is SEDG, Solar Edge Technology. It trades in the US, it's shortable, it's marginable, you can buy a fraction of the shares, you have plenty of quotes. And what do you see in front of you? You see a stock that's moving up basically the whole trading day. In this case, the trading day is only 3.5 hours because it's a unique day where the US markets closed early because of the 4th of July holiday. So what happened here? In this case, we saw the price action move from the beginning of the trading day to a top of 26.40. You can see it clearly. Then the price retreats, and then you can decide based on your knowledge and your expertise to buy it around this area and buy it again around this area and maybe sell it at the close around this price. Again, and in this case, you can make money when the price of the stock is moving higher, and you can decide very easy what is your stop loss. That's another way of trading. You say, okay, I'm going to buy the green line, which is 25.45, and make my stop loss, or place my stop loss at 25.12, or buy 26.40 and have my stop loss at 26.10, or any other variations of entries and stop losses. Or you don't want to use stop losses, don't use stop losses. I'm just making a point that that's an option. So what is a stop loss? If you make a mistake and the price goes under this price, it will be sold to a person that wants to buy. And why is it okay in the US equity markets? Because if you look at the volume of this stock, it traded 9.5 million shares in 3.5 hours. So the volume was very good and enough for you to find buyers for not for any quantity, of course. Let's say you bought 1 million shares, it's not reasonable. But as a day trader, you buy anywhere between 400 and 2,000 shares. You'll find the buyers almost at any price level, and that's one of the additional benefits of the US equity market. So if you want to summarize what happened here, in this second video, I show you how the intraday price action works, how you can move from the daily chart to the intraday chart, and how you can take advantage to buy and make money when the stock moves up, and sell or short. And hope you remember the NVIDIA example. And we're going to dwell into additional issues that regard day trading in our next videos. See you in a bit.